Hi folks, welcome to this video on accounts receivable. So in this particular question, we're given the trial balance for a company, Chloe, and they're giving us balances in the receivable, and this is the gross amount of the receivable, the debit balance. And we can see the allowance is in an unusual position. It's in a debit balance, which means what? It means that we wrote off more to the allowance than we actually set up in the beginning. We know we have credit sales revenue of $684,000, and we do have some sales returns and allowances of $30,000. So the first thing we're asked to do is we're asked to give the entry for bad debt expense in each of the following independent situations. So now when they tell us that the allowance should be 4% of the gross receivable, first thing you have to remember is that the gross receivable is the amount before the allowance is deducted. So we have to take 4% of this number, $105,000. So since we're using a percentage of receivable, we're calculating the ending or final balance that we need in the allowance, and that's $4,200. Well, given that we started with a debit balance of $1,950, that means that the allowance has to be increased by $6,150. So to make that journal entry, we need to debit the bad debt expense and credit the allowance for $6,150. Again, you'll recall that whenever you're making an entry for the bad debt expense, you're trying to set up the value of receivables that are unlikely of collection for the period. So that debit to bad debt expense does that in part, but you also need a credit to the allowance for doubtful accounts. So this is why we are looking at a reconciliation of the allowance in order to determine what the debit to bad debt expense is. In the next independent scenario, they tell us here, again, using this data, so this is our data, using this data, we also know that our historical records indicate that accounts receivable amounts based on their aging or how old they are. We estimate based on that age that in the 0 to 30 days outstanding, 1% of $36,000 or $360 won't be collected. So what we could do, I can't fit it in here, but if we multiplied them out, we'd get 360 here, right? And then if we took 48,000 and multiplied it by the amount that we think is uncollectible, which is 5%, that would give us 2,400, right? And if we multiplied out the 12,200 and multiplied that by 12%, because 12% is unlikely of collection, we'd get 1,464. And then if we took the 8,800 that's outstanding over 90 days and multiplied that by 0.18 or 18% to give us the amount of the 8,800 that we think is unlikely of collection, we'll get 1,584. So if we add up all of these numbers, well, what I did here is I just did the multiplication in a string here, and if we added up all those numbers, we would get $5,808. So what we're going to do is we're going to use this because we're using the aging method or the aging method of accounts receivable. We know that this amount is the actual amount that we need in the allowance. But again, we started with a debit balance of $1,950. So now we have to shore it up, the allowance for doubtful accounts, by crediting it $77.58 to get this ending balance. So in order to credit the allowance to set up the appropriate amount that's needed, we would also debit the bad debt expense for $77.58. Now in the next two sections, they want you to assume instead of opening with a debit balance in the allowance, they want you to assume you have a credit balance in the allowance of $1,950. So now, assuming it's a credit and assuming that the allowance needs to be an ending balance of 4% of the gross receivable, and that should be 105, right? We're going to get 42,000 or 4,200. So that's our ending balance. But if we start now with a credit balance in the allowance of $1,950, now we only make a $2,250 adjustment, not like we had to do up here. Up here we had to make a $6,150 adjustment. Now we only have to make a $2,250 adjustment to get the allowance to that balance. And if we need to credit the allowance, that means we have to debit the bad debt expense in order to set up the value of accounts unlikely of collection. And that will be done for $2,250. Again, assuming $1,950 is our credit balance and the allowance to open the period, now we have to assume that we're using the historical information that we were given in Part B, okay, which actually should be, I guess, Part 2. They say B, but I think they mean Part 2. Okay, which is here, this historical data here. So we already know that using that historical data, we need to have 5808 in the account. So now we also know that we have 1950 in it. So the question says we needed to use those percentages in item number 2 above, which gave us 5808, but we only have 1950 in it. So our adjustment to the allowance via a debit to bad debt expense is to debit the expense for 3858 and to credit the allowance for 3858. Now we're asked a theory question from the perspective of an independent reviewer of Chloe's trial balance. Comment on the unadjusted debit balance in Chloe's allowance account at the year end. Well, clearly that tells us that we need to set up a larger amount. When we see that Chloe's allowance at the end of the year is sitting at a debit balance, that means to us that we really need to have it sitting at a credit balance, right? Because it means that we wrote off more to the allowance than we actually set up to write off. So in essence, what we did is we underestimated the amount that we need in the allowance account. So we need to set up a larger allowance estimate in order to accurately capture the value of accounts unlikely of collection. So hopefully this has clarified the topic of the allowance for doubtful accounts and accounts receivable. Hope you enjoyed the video.